Gas, pretty quiet in the early hours of Thursday. Before we start, a quick word from our sponsor. This video is brought to you by FXEmpire, the world's leading retail brokerage firm offering ultra-fast execution and no overnight fees. Look for a link in the description below. The natural gas markets have been a little bit negative in the early hours on Thursday, gapping lower, but really at this point in time, we are just simply continuing the overall sideways action that we had seen for quite some time. The market is in the midst of trying to sort out whether or not price is going to finally roll over due to the winter season ending, or if we are going to continue to stay at these elevated levels. Now, there are a lot of different things going on at the same time that could come into the picture here, but I think what you have to keep in the back of your head is that sooner or later, the demand for natural gas does fall. It could be a recession, it could be temperatures, or in the case of the United States, it might end up being both. And if that's the case, then obviously there's no real reason for natural gas to continue going higher over the longer term. Typically, this time of year, we do fall apart, but it's very noisy, as you can see. When you look at the recent swing high, it formed a horrible candlestick. And it's also worth noting that on the weekly chart, the previous week was pretty ugly as well. So I think we're still in that transition phase. If we can break down below the 50-day EMA, then there's a real shot that we continue to drop and perhaps reach towards the trend line and then eventually $3.50. By the time the move's over, we should be much lower than that, but that's my initial thought process here. My name's Chris. I work for FXEmpire. If you enjoyed the video, give me a thumbs up and subscribe to the channel for more analysis.